Good evening, everybody. All right, as we can see, the expected profit taking after all this dojis up here did start in today. Now, the Dow was the most strongest of all the indexes today because it closed back up above the T-line. The other ones, the S&P 500 did close back below the T-line with kind of a little gap down situation. At this point, not only does the 50 become a viable target, but I would throw some of the Fibonacci numbers on here. Making the 38% retracement right about the 50. So those are other retracement levels this market could pull back. Well, the stochastics didn't roll over until today. Prior to that, they were just kind of holding up here in the overbought area. But they are starting to roll over a little bit, more so in the NASDAQ, where you had that evening star signal with the gap down. So the only thing that's going to save this uptrend right now for the short term is if they open positive and take it right back up tomorrow. And the transportation index was surely telling us something today, that they wanted to bail out of the transports, which had been kind of a steady eddy here in the last, whatever this is, 6 weeks. So good possibility of seeing a pullback to the support levels, then have to see what it does from there. So this is why I was kind of mentioning that having both longs and shorts in the portfolio when you're in this situation at least protects the downside from getting obliterated if you're fully long. And the fact that we started seeing lots of little indecisive trading up here, then that doji shooting star on Friday was an indication that at least to be nimble, that any weakness, you start taking some profits. Let me see what else we had. Crude oil bounced back a little bit, but with the expectation of where do most people buy or sell, they panic sell at the bottom, gap down in the oversold area, you start looking for a buy signal. Let's see what natural gas did. Natural gas just whipping around here. Gold prices. Yeah, trading back down after hours. So it has come up here to the 50-day moving average on a big, strong, bullish move. But if they start selling it back off and can't stay above the 50, then obviously our downtrend is still in progress. Oh, this is silver, and that's not working out very well. Silver came up and just touched the 50 today, before it started backing off. Trying to see what other things out there are doing anything of any great significance. Soybeans just kind of in a sideways mode. Lean hogs. These are all getting out into the February contracts now. Popped back up. But looks like it's still in this wedge formation. Or maybe this was the wedge formation. The dollar. Let's see, Z4. Dollar's kind of holding steady here. Not anything of any great trend. Why do we always have these things on here? Let me make sure we're getting that one right. Yeah, the dollar just kind of flat at this point. Whoops. Wheat is H. H5 wheat. Wheat, as you can see, had the slow curve. More than likely, it'll attempt the 200-day moving average and then see what it does from there. Corn, also kind of in this flat mode, not really going anywhere. I don't know whether I can get junk bonds over here. High yield. Bond prices down quite a bit. Yields heading up. Let's see, that would be the 10-year notes. Well, the 10-year notes are still in this fry pan bottom type setup. Nothing there yet. JNK junk bond ETF. High yield ETFs. Yeah, if they're going down, that means the yield should be going up. Okay, let's see. What else did we do? We did gold. We did dollar. Can't think of too much more. Cattle just in a slow uptrend. Well, we looked at the transports already. Dow transport got hit pretty bad. So with that, let me, yeah, there was a few that got slammed today. AMBA, for example, has done a big evening star signal. So this uptrend will only remain in progress if they open this positive tomorrow and bring it right back up above the T-line. That follows along with GPRO. GPRO seems to be caught in this wedge, not really going anywhere. So you have to watch to see what happens at these support and resistance levels. Let me see if I can draw the lines. So this is still kind of squeezing in here. So we need to open, yes, we need to open positive and trade positive tomorrow. Whoops, let's see. F.CF is an H. Coffee, kind of stuck in this sideways mode also. Emeritus, yes. Yeah, we did gold. Gold popped back up. But was trading off after hours, heading back down to the 50. So it has to stay above that level. And the Russell looks like it's coming back to just test at least the 200, see if it supports at that level also. So which meant on a day like today, there wasn't too many things that were acting well. A lot of them telling us it's time to close out. We closed out TSO just because we had a doji gap down, and then they traded it lower after the doji right on the T-line. Can always buy it back on the next wave up. And the only thing that really showed up as holding on to any strength today was Leaf. And Leaf is coming out of this classic pattern. It's in this classic pattern. The fry pan bottom, strong price move, J-hook pattern, next wave to the upside. And STX held up reasonably well today. Again, with a J-hook pattern in progress, all you can do right now is stay long on this one. I hate that thing. As long as we don't see it close back below the T-line. had any exciting charts on the bullish side. Newmont Mining might have had a kicker signal, but doesn't have a real significant price move to it. I think this is PVG. Bullish Harami. If this opens positive, next criteria is probably right up here. The next target is right up here to the 200-day moving average. But this looks like your J-hook type setup. Hawaiian Air also was acting well in the J-hook pattern. So the patterns are still in, as long as you stay with the patterns, your probabilities of being in the right trade at the right time or in the right direction, even if the market goes against you, is pretty good. Hawk, about ready to break out, which would mean they're heading to the top of the trend channel. Another little move to the upside. And Tazar held up well today. Another kind of a fry pan bottom, J-hook type pattern. Dang, that thing. Stay long as it doesn't close below the T-line. So there's some steady eddies. SIGM is in this 45 degree, and this is a very simple trade analysis that you just stay long as they don't close it below the T-line. Red Robin's Burgers, front row. Aha, RRGB. Another J-hook pattern. Remember, the reason that this move is in conjunction with this move right here is anytime you see that they're buying something with great enthusiasm and then there's profit taking, when the profit taking's over, more than likely that same enthusiasm is going to come right back into the stock price. Bryant, we'll get to the individual stocks after I tell Jim to do the double line. Another J-hook type pattern setup with kind of a doji sandwich breakout. This one you can be buying with the anticipation that if it moved up 8 points from here or from over here, that you're probably looking at somewhere around the $46, $47 range. And AMAG, another kind of steady eddy in this uptrend. This is why the T-line becomes a very effective process or method for keeping you in a trade, even though the markets look bad or there's other bad news out there. As long as they can't close it below the T-line, it's still in an uptrend. So that meant the other side of the coin, the shorts were acting well. We were short CLF. We'd covered it over here, but then notice what it did right here at the T-line. Hanging man, bearish confirmation. This big tells you can very still short this with the prospect of this one heading down to the bottom of a trend channel, maybe down below $5. And that was also seen in Netflix, that this dumpling top is the opposite of a fry pan bottom. That when they start gapping it down over here, that means they're wanting to come out with great enthusiasm. That's where you're going to get these big moves to the downside. If this is wave one, wave three could take you all the way down into about the 260 area. Let's see. So we're looking for things that have pattern setups that are starting to roll over. When we can see that slow curve, that means they're usually going to slam it to the downside. And so this is why we want to be prepared when we see something where it's kind of observe the obvious. When you came back up to the 50 on this ENLC, doji, gap down, that told us they weren't going to get up above this 50-day moving average, that you still had plenty more to the downside, or the prospects of more to the downside. And again, we're trying to visually recognize when it is time to get into some of these positions that are just starting to roll over with the potential target. This one still could move all the way down. This is VIMC, could still move all the way back down into the $5 area. What do we got here? MOBL, same scenario. Anytime you can observe the obvious. The obvious was a left-right combo right here at the 50. Failing the 50, what did also fail? Failed this downtrending channel. That told us we're probably heading back to the bottom of the trend channel. From this area down to here, that's a good, decent percentage. These are shorts on these right now. TKMR, just starting to roll over. Where's your potential target on this one? Take this downtrend somewhere down in this range. That could be a 40% more downside. That's a definite. As a matter of fact, I'll put a little. Now, the reason the shorts are working well is because we are in an overbought condition in the markets, and the prospects of it backing off become that much greater. So even if you think the market's going up, you should definitely have some short positions in your portfolio that if things don't work out the way or they start taking profits in this market, at least you're in some short positions while you're checking to see whether any long positions you have in the portfolio need to be closed out. Or if you're closing them out, hopefully your shorts are offsetting any losses that are being produced on a daily basis in your long positions until you get them closed. Let's see, what did I just do? JKS. TGTX. Another one, that evening star signal big breakdown. I would suspect about a 15-20% move down here to the 50-day moving average. SRPT also breakdown with a shooting star. That if they break through this level, you got the potential of this type of price move, which was about 9 points. 9 points from here could take you all the way down into the $8 range. ESI, this big slow curve of kind of dumpling top, and then notice your slow curve right here, which makes this a very easy entry point tomorrow. If they open below the 50, because it looked like that's where it closed acting as support, means there's no support. That could be a pretty good shoot, almost is it going from 8 to 4? Pretty big price move. CBI, yes, was another short that we'd looked or was recommending on a weaker open today, and that's because you had this little abandoned baby up here, gap down below the T-line, slow curve. Another one that if you kind of extrapolate where the support levels are, you could be heading all the way down here into this 37.50 area, or another good 25% return. BBSI, slow curve, observe the obvious. And why does this start picking up steam? Because more people see that it's not going up, but it failed. They start bailing out of these things. And that's where you can pick up some very big profits on the short side. That one could easily go from the $20 down to the $10 area, same magnitude as this move, making some good profits. Are the low price stocks? Yeah, these are shortable, provided your volume is good. So as long as the volume's there, that you can get in and out of them easily. On any stock, whether it's high price or low price, if there's not a lot of stock traded on a daily basis, it just makes it more difficult to find that stock in margin accounts to be able to borrow it to go short. So a lot of times on a low price, low volume stock, they'll come back and say, yeah, we can't find the stock to give you. And then you have to figure out another alternative, which are maybe buying the puts and or go find something else to short. JG, buying puts versus shorting stock is all up to each individual. If you're comfortable with buying puts and you're an option trader, yeah, buy the puts. If you're more oriented towards stocks, it's up to each individual. Me couldn't recommend doing one or the other because some people don't like buying puts. Other people want to just stay with stocks. Yep, they start ganging up on them. What is the best volume? Enough, yeah, probably. I want to see at least 400,000 or more. And GWPH, there's that left-right combo back below the T line. Again, this is where you step in and watch, see what the whole market trend is doing in this stock. And it's having a hard time getting up above this level, which means they could bring it back down to this level or a good 40% to the downside. Jose, usually if the stocks and the market is going down right now, I'm usually going with the much shorter expiration date. So I'd be going, right now we got 3 weeks in the December. This market is probably going to have probably well move within 3 weeks and probably move back. So I want to get the best leverage out of being in the shortest time frame options, which would be the Decembers right now. And Scotty, another one. You can see can't get up above the 50-day moving average. This one you can be shorting on weakness with the anticipation that they're still kind of heading in an overall downward direction on this, especially if they break this level right here. You could have another move like this, which was about 30 points to the downside. That would take you all the way down into the $20 area. The solar stocks were weaker. It's a JKS was one of them that we showed earlier, where it's failed here at the 50 with a doji gap down. And I think First Solar also did a kicker type signal. There's your downtrend. I mean, almost to the point where you could almost draw a straight line right down through the tops. If you drew a parallel line, that means they would be way down in here, probably down in the $32 range. And let's see, I guess that's about all. There's nothing real exciting out there to go after. Now, IG, anytime you see an uptrending stock in a bad market and they pull it back and then close it near the top end of the trading range, that means they've taken out all the week. There's usually going to be some more upside. And DYAX backed off a little bit today, but didn't get back below the T-line. So this is where I just stick with a very simple rule. I'll stay long as I don't see it close below the T-line. Now, in other situations where it does close below the T-line, and if you're still holding the position, that's a significant move. That was well over a 10% move today. Maybe not quite 10%, 8%. This, because of the length of the uptrend, probably give it another day, but it has to open positive and trade positive to stay in it. Because it did stay up above the T-line until today. Now we just want to see if this was a one-day pullback. If we wake up and they're opening it lower and starting to trade it down, that means there has been a reversal. Look for the next support level, but you get out of it and wait for that position. So is the channel estimate the way to determine trying to look for a buy entry? It can if it's on a support level, yes. And then if it's coming up to a resistance level at the top of that channel, then you start looking for sell signals. The reason is that channel is being formed, and everybody that trades technically can see that that becomes a resistance level. So when they get up there and it doesn't break through, that's where they start taking profits, and you'll be able to see that immediately. Trying to think of what I had. Let me move this over here. Let's see. Yeah, there wasn't very much today. Oh, another one that at least held up was AVNR. Another situation where when you see on a bad day that they've come down and hit support, right back up again, that pretty much tells you they aren't selling it off. This selling was based upon everybody coming out because of the market. But whatever is moving this stock is pretty much telling you they didn't care what the market was doing, that after the knee-jerk reaction of the selling was over, the buyers were stepping right back in again. So a T-line breach closing doesn't necessarily mean get out. It means wait. Well, depends on where you are. If something like AMBA, and I think this was more of a shooting, let's see, let me check over here. It was more of a kind of a spinning top, shooting star, that if it opened weaker and started trading down, at least we know, especially if it came back to this level, where it was probably going to. It was probably coming back at least to the T-line. So if you didn't take some profits up here and you held on all the way down here, yes, this is still telling me after this length of stay or length of time that it stayed up above the T-line, I will give it one more day. Now, if it opens here and starts trading down, I close it out. I can always buy it back if it comes back up. Even if the AVR looks, yes, it is overbought, but look at the pattern. This is your slow curve, fry pan bottom. As long as it comes out of this pattern, you stay with it as long as it doesn't close below the T-line. Do you draw channels as an aid to when to get out, or just use scatter? As an aid. When we see sell signals, oh, where was some of these? That wasn't the one I wanted to do. When we see sell signals and the stochastics are getting up toward the overbought area, we don't use the 50-day moving average to tell us when to buy or sell. We use the 50-day moving average as a confirming indicator that if we start seeing potential sell signals at that level, that's that much more evidence that's where they're starting to take profits or starting to come out of that position. So we're not selling because it failed the 50. We're selling or shorting because we saw a bunch of dojis, candlestick signals at that level, and then it was confirming. So we weren't buying the fact that they failed the 50. We were buying the fact that they did a doji gap down from the overbought condition, and it was doing it at a level that everybody else was watching right here at the 50-day moving average. Okay, I guess, yeah, with the market right now putting us into an iffy situation, right now you want to have some more puts added into the portfolio. Things like GEOS was another one that we recommended here recently because it failed right here at the 50. And we want to stay short until we see a buy signal. At this point, we had a spinning top. Stochastics in the oversold area. Where's a logical place to tell you they're bouncing it, at least, if not reversing it? I definitely wouldn't want to see it come back up through today's high. That would tell me the bulls are stepping right back in. So pattern trumps stochastics, yes. Yes, well, many times we will see we will see when they break out of a pattern, you're already up in the overbought condition. So you've got to keep in mind that when you're buying a signal, you're buying a signal based upon a signal occurring in the oversold condition. When you're buying a pattern, it's usually going to be on the basis that it's already in the overbought condition and that it is breaking out. GOES, oh, yeah, you can be buying this or shorting this on weakness with the anticipation that if this was wave one, which is 42 to 26, 27, 42 to 27, that's about 15 points. 15 points from here would take you down into the $17 area. You can still short it, but you just want to be definitely nimble at this point because you're starting to see a potential signal at the recent bottom. So you don't want to see it bouncing up from here. The worst case scenario is if you were short, you cover it. If it comes up through here, see what it does once it gets to the T line. If it fails, you can always reshort it. Okay, trying to think of anything interesting. Right now, today was just kind of a sit and hold day, only because there was signs of buying, especially in the Dow. And a lot of people ask, why do you use the Dow? There's only 30 indicators or 30 stocks in there. Because everybody watches the Dow. So the Dow is a good indicator of what's going on in investor sentiment, even though it's a much more limited indicator. It is the one that everybody uses. AKRX, no, it's not a good chart to go short. You're not in the overbought condition. You didn't really have a sell signal. I think this was probably an uptrending stock that just pulled back to the T line. So just because there's a sell signal, if the other indicators aren't confirming, you basically want to see a sell signal in the overbought condition or a buy signal in the oversold condition. A buy signal in the overbought condition doesn't mean very much. Futures are holding, okay. All right. Can you give a brief description of the World Cup Advisor or direct me to the info? World Cup Advisor is nothing more than we've developed criteria for when to be long or short a trading entity. So crude oil would be a good example. But if we saw sell signals in crude oil, we stay short until we see a confirmed buy signal, which may have been here, but then negated it the next day, would have reshorted. But it helps because it's got the parameters already set up, it takes that terrible function, our human emotions, out of the trading. So when a trade kicks in for my account, anybody that's World Cup set up to follow my account, their trade will go in their account at the same exact level. It's not that I get in first and everybody else, they put orders in for everybody else. It's all one order. And if we sell crude oil at whatever dollar amount, $150 a barrel, and we do 50 contracts because there's 50 different accounts. If some are sold at $115 a barrel, some are sold at $114.95, some are shorted at $114.90, so that the average cost of all those contracts is $149.37. That's what the cost will be for everybody. And then when the buy signal kicks in and it closes out my position, everybody else is also closed out at the same time. So it's just a kind of following the trading without having to have a lot of emotional buying and selling going on. How much more selling do you think oil services, oil patch stocks can have? Right now, a lot of them are getting hit with big price moves to the downside, but they may be wave threes, but they're also gapping down and trading off pretty big. That's usually an indication we're getting near the bottom. So you start watching for buy signals, especially after they've moved down excessively like they have. So I don't have a guesstimate of where, let's see, crude oil, but I think it's still got more downside, which means more than likely until the sentiment changes in some of these oil stocks, you stay out or stay short until you see the buy signal. Have you filled the 50 subscriptions yet? I don't know that. I know that there was 2 or 3 people taking multiple units, like 10 package or 10 units. Somebody else was taking 8 units. Somebody else was taking 4 or 5. So I don't know whether it's sold out yet or not. It isn't a direct reflection of your commodities account. No, the trades are going to be a little bit longer term, provided they continue in the direction they should. And they're going to be more of the, what I want to say, bigger volume, slower moving trading entities like the dollar, like crude oil. I do a lot of trading in my little account in cattle, feeder cattle, hogs, soybeans, that type of thing. But if we were putting on a contract, so we were trying to do 50 contracts at a time, the volume in those trading entities aren't as big as the dollar, gold, and that type of thing, or the S&P. So we're trying to stay where when the trade goes on, and anticipating it's going to be a little bit more longer term, it's going to stay there probably for 5 days, 10 days, 15 days, or longer. Whereas when I trade in my account, I might be in and out of a trade on the same day. Why then do you like trading livestock? Because when I go in and put on 4 contracts, 8 contracts, 12 contracts, it's not going to affect the price. But you start getting up into 50, 60 contracts at a time, you start moving the price around. Yeah, I think once the trades go on, they send a notice of what trades or what transactions you're in. So a few people said, yes, I'd like to trade that. And when I see the transaction go in that account, then I'll probably trade it in my own account also. Okay. Oh, and I guess the other important factor I should mention to everybody tonight is I think we're running the special again on Who is Santa. That if you buy the Who is Santa book, either on Amazon, Barnes & Noble, any of those places, and let us know. I think Pat has it set up where you get $50 worth of free as a coupon of buying stuff off the website. And I think also there's a caveat in there that if you like it, you put a good review on Barnes & Noble, Amazon, or wherever. And if you don't like it, just don't say anything at all. Just keep it under your hat. Oh, where's the info on World Cup? That's a good question. Who manages the trades? Oh, it's all done automatically in World Cups. Oh, under announcement tab? All right, thank you, Ed. Who wouldn't like it? That's what I say. Okay, Jim, let's go ahead and do the double line. That's right, a case of beer. All right, Jim, let's do the second double line. We'll probably have most of the biggies on here. Price line. Let's make this bigger. Price line, that's a toughie right now. It's in a sideways mode. There's no trend to it. I'd be trading something else. Now, the reason I say I'd be trading something else is if you look at a chart like this, there's really nothing there to show you which way you want to be going. And if that's the case, take your money. If the chart doesn't tell you which way you want to be going, which is the whole purpose of using candlesticks, move out and move on to something else. This may be good for a long or short 3 days from now, 3 weeks from now. But right now it's telling you move, or the risk-reward factor isn't good enough to keep your money in there wanting it to do one thing or the other. Cree may have rolled over today. The only saving grace, or say saving grace, is if it's supported here on the 50, which means it has to open higher and trade higher to stay in it. If it opens lower, you definitely want to be out and or going short. Cena, another one that you can be going short. And part of that analysis is which way is the overall trend going? Well, we can see the overall trend is heading down, and they haven't been able to get above the T line. Where's the next trend channel? Well, if you can draw a line right through the tops here, if you draw a parallel line to it, you're looking at somewhere around the $32 area. Yes, we can, Victor. All right, let's see what else we got. Abercrombie Fitch, another rollover. Let's make this bigger again. Notice the kicker signal. They're back down to the bottom of the trend. They failed. Where's the next target? Back down to the bottom of this trend. So if I can draw a straight line, you're down here somewhere in the $20, $26, $25 range. So this one you definitely want to be short if they open this week or tomorrow. It tells you the last support level is gone. RGLS, this one has to open positive and trade positive. The reason for that, or not say the reason for that, the reason for giving it a little bit more benefit of the doubt today, even though it closed just below the T line on an evening star type signal, is two factors. One, we're still coming up off the gap up through the T line, and two, stochastics are coming up. So that means we should be in an uptrend unless they open it lower and now make they confirm the evening star signal, which means we're probably in this trend channel, making the next viable target back down to the 50-day moving average. GLD, kicker type signal. All the golds had a pop, but this is not a reversal signal. This is a pop. I'd just be a little bit more careful on the Schlumberger. Still in a downtrend. Gap down on Friday. You stay short until you see a buy signal. At this point, if I was short, I wouldn't want to see it come back up through this level. That's a level that tells me the bears definitely took control and are staying in control. BABA, look for, this is another one where you put your Fibonacci numbers on here, because there's nothing here, obviously, because they haven't even been in existence for 50 days. So your Fibonacci number is, they practically closed right smack dab on the 31% retracement level today. That would tell me if they open this positive, this downtrend channel is now stopped. They're going to come back up to the top of this trend channel and then see what it does from that point. See if I can get rid of that. And XEL. Stay long. That's a nice J-hook pattern just about ready to break out. Amazon. Amazon also hasn't had a reversal, but it's closed below the T-line and the 200. So to stay in this one, it has to open positive and trade positive tomorrow. If it opens lower, you close it out because it's coming back to one of the other moving averages, whether it's the 20 or the 50. Then you can always buy it back from there. Apple, same scenario. It has to open higher and trade higher tomorrow to stay long. If it opens lower, you close out the position because that tells you they failed, and then you can always buy it back if they bring it back up through the T line. CMCSA, Comcast. Looks like it had trouble getting up through the recent high. If they open this lower, at least know your first target is back here to the T line. You can close it out and then see what it does once it gets back to the T line. Estee Lauder, still, this one I wouldn't trade only because institutionally it's a lethargic trader, and two, it's still caught in this sideways downtrending mode. There's really no trend to this one. And GIS, you can stay long on this one, but also another institutional type trader. Your rate of return won't be that great, but your direction right now is that it's in a J-hook pattern. Anticipate it's going to come back up and test the highs. I hate that thing. Somewhere up here in about the 53.80 area. We did Cree. Cree definitely needs to be closed out if it opens lower tomorrow. It has to open positive and trade positive, and preferably back up through the T line. CDK, that's a nice little J-hook pattern setup. If you're buying this one tomorrow, even though it hasn't had a definite reversal signal here, you stay long, just use the T line as your stop, but it needs to stay above the T line so your J-hook pattern stays in progress. Dover, stay short. Make this a little bit smaller, so you've got a wave 1, wave 2, wave 3, same magnitude as this, 90 to 70, 20 points. 20 points from here would take you down into the $62 range. Nokia. Nokia, little bit telling here. Notice they opened it right about on this resistance level and traded it off. Tells you if they open this lower tomorrow, you close it out. They're coming back to the T line at least, if not into a wedge formation. The only way to stay with this one tomorrow is it needs to open positive and trade positive, preferably breaking out through this little downtrending channel. Screwed one, okay. SGMS, stay long as this stays above the T line. Carnival didn't do a reversal, but it did do a gap up in the overbought condition that broke out through this level, and then they brought it right back down to this level. This has to open positive and trade positive. If it opens lower, you close out the position immediately. That would tell you that not only has the uptrend failed, but you're back into the trading range. EXPE, another one where all you can do right now is stay long as it doesn't close below the T line. City Corp, bearish doji sandwich. Look for it to come down to the 50. MasterCard, stay long as this stays above the T line, doing a J hook. HURN, this one has to open positive and trade positive. If it opens lower, pretty much telling you they're not moving up anymore. Lots of indecision going on here. You want to be out of the position. The J-hook pattern disappeared. The sideways mode is now your predominant mode. ONNN had a good looking chart. You stay long on this one. If I was long, I'd have my stop right here at today's open. It shouldn't come back down through that level. But notice a little trend kicker type move off the off the 200-day moving average. And Deere had a good-looking chart. This one, if you own it, you stay long, it's just not going to be a wild, big profit producer. And SREV. This one's got a left-right combo with the next likely target up here to the 200-day moving average. Fold sold off hard, but notice it didn't have a sell signal, and it hasn't closed below the T line. This pattern is still in effect. You stay long. Now, you don't want to see this open lower and close below the T line. If you do, you have a bearish doji sandwich. You close out the position. King, you want to stay short on this one right now. Buy signal and close back up above the T line. Yahoo, this one you get ready to go short another one that you would probably want to put the Fibonacci numbers on, which we can do right now. Telling you here's next potential target, 50% retracement, 62% retracement. Now, is it going to go back to those levels? No, it's just levels to watch to see if that's where your buy signal does start forming, because that means that those levels that everybody else is watching or the people that trade the Fibonacci's are going to start buying. Let's see. This one, nice J-hook pattern. That one, you could be buying this one with the anticipation that if you've had a 21-point move, 11-point move, that your next move should be up into about the $65 area. And BMRN, all you can do right here is stay long. USO, that's the oil fund. I wouldn't get into it just yet, but I'd want to see more confirmation. Now, if it does open positive, you can trade this back up to the T-line, but you just have to be very diligent when it gets to the T-line to see what type of signal it does at that level. UGAS, stay short until you see a buy signal. RPTP, just stay short. Notice the kicker type effect failing at this slow curve. You stay short on this one. We did Tazar and AAN, row. AAN, row. You're in the bobble. You're bobbling between the 200 and the 50. If you own it, you stay long. If you're looking to buy it, you buy it at $29.15, knowing that it came up through the 200 on a J-hook type pattern after supporting on the T-line. ARIA came back to pretty much where we would suspect it to do after a dark cloud. Is back to the T-line. Another one that has to trade up above the T-line, or it's time to take profits on it. Facebook might also be caught in this wedge formation. If you're long, should have been out today. If you didn't get out today, if it opens lower, you close out the position. Let's see, we did those three, Apple, Amazon, FOD, I don't know, Mike, what that was. AMGN, just stay long on the J-hook type pattern. We did Nokia, PPP, sounds like my bedtime. Another one that can be bought on positive trading with the next target being the 200-day moving average. CELG. CELG. Another one you stay long. At this point, I would probably use today's low as my stop. If it comes back down through there, it's going to use or heading for the T line. RGLS has to open positive tomorrow. FOLD came back up above the T line. It needs to open positive. If it opens lower, it should not come back through the T line. This is where if it opens lower after a positive trading day showing you the bulls were in control and they were able to take it back down below the T line, use the T line as your stop even on an intraday basis. Harmony, nothing there yet. But you can buy on positive trading with the realization that if it hits the 50, you need to see what it does at that point. Halcon, stay short. Nah, you can't stay short unless you were already short. Right now, you don't do anything with this until it does show a buy signal and it closes back up above the T line. And BDSI, nothing there to get real excited about one way or the other, just kind of a sideways mode. If you were going to short it, you wait for it to come back down through this little bottoming level. You can go short it with the real, or with the target being the 200-day moving average. And Tesla got battered around today. There's the slow curve. There's a doji gap down. Makes this very simple. If this opens lower tomorrow, you can start shorting it because now your next target becomes this downtrending channel, which could take you all the way back down into the, looks like the 190 area. And UNH, just stay long. See, we did fold. We did, I just say, did we do Amazon? Oh, it has to open positive and trade positive. ECYT. This one you can get ready to go short if you want to short a $6 stock. If you're long, it has to open positive and trade positive tomorrow. If it opens lower, breaking this downtrending channel in the 50, they're going to come back at least down to this level. Mags. Mags also has to open positive to stay in it. If it opens lower, it's telling us the toppy area over here is the toppy area over here. You close out the trade because now you're probably heading back to the bottom of this channel. And let's see, we did AVNR, we did Cree, we did MasterCard, we did STX, which held up pretty well today. You stay long, but this one has to open positive. Otherwise, it could be forming a bearish doji sandwich. Kate. This one has to open positive. Otherwise, you got a left-right combo. You could be shorting this one with the target now being back to the 50-day moving average. SGMS, just stay long. Southwest Airlines still moving up nicely. Wasn't until today. I would still stay long on this one. Notice it closed right on the 3T line. You stay long as this closes up above the T line. And JetBlue, same scenario. Nothing here today except a little bit backing and filling. Please explain why. GOD, not a reversal. Oh, because it isn't a signal. There's no signal here. It looks like a kicker signal, but it's just a strong up day and a downtrend. So if this had been some sort of signal, the Japanese rice traders would give it a name. It's not quite a kicker signal because it didn't open above the previous day's open. So this is just an up day and a downtrend, which is usually a lot more suspicious than if it's not a reversal signal. You just be a little bit more diligent if you're buying it. Yeah, GIS. Yeah, just nothing real exciting about this one way or the other. The Qs did close up above the T line, but just like the NASDAQ, the NASDAQ was a lot more bearish because it closed below the T line. Just have to watch to see what they do in the morning with these. Again, we've had hard sell-offs daily, or a day hard sell-off in this uptrend. So you just have to watch to see if this was just a bad hair day or just they decide they're going to reverse this market. Bidu, you can get ready to go short with the 50 being the potential target. Let's see, the announcement tab. That's a good question. I never go to the site. XLU, just stay long as it stays above the T line. Tweeter, wouldn't be long or short this one. Well, shows what's. Might even be short, but I'm guessing that we're right at the support level, which is almost right here at filling the gap. Probably did fill the gap today. To consider stochastics overbought, do you require both the K and D to be over 80 or either? Overbought, I'm not playing stochastics. I'm just seeing where we are in the trend. So if we're just about here and I see a massive sell signal, yeah, that tells me we're close to the overbought area and we're seeing a big sell signal. If we're here and we see a big sell signal, that doesn't tell me very much. So I'm not trading the stochastics. I'm just trying to see where we are in that in the relative position of this trend. So it doesn't have to be an exact science on the stochastics. SLW, that's a little choppy. That might be taking you back up to the 200, bouncing off the 50. Again, I'd be a little bit more nimble on this one, but usually this is where they've come up through a resistance level. Here's our scoop pattern, hit the support level, or came back to see whether it was going to act as a support level. If it does, they're going back up to the next moving average. Cons, kind of a bearish scoop pattern. This one you can be shorting weakness if you should have been out of it today. You shouldn't be back in it until you see a buy signal and a close above the T line. Or if you're going short, you need to watch to see what it does when it gets to the 50. U.S. Steel, stay short until you see a buy signal. You're right at the support level. You're right at the 200-day moving average, but your stochastics say you could have some more downside, so watch to see if they can break through the 200. And FEY, notice a little wedge formation setting up. I wouldn't be long or short this one right now until it breaks one way or the other. Oh, it's yeah, again, that's the problem too, that if it is a kicker signal on toss, because you got to remember, each one of these chart services have different feeds, or the timing of the feed when it gets to them may be a few seconds later than another feed, which means the charts are going to look a little bit different. So if it is a kicker signal, again, use it on the basis that you want to stay long. You just have to be a little bit more diligent watching it. Oh, I think we did coffee. Coffee. No. Yeah, coffee. Kind of getting ground up here. Oh man, I don't know where he keeps coming up with this stuff. Let's see. I see that coffee wouldn't be long or short right now until it breaks out of this junk area. I see the GOD kicker and toss. It closed so strongly over the 50. I thought it would be a good reversal. Yeah. Again, if you buy it, just be a little bit more diligent. Okay, then it's kicker on trade station. All right, and let's see what it is over here. GOD. Yeah, and it's a kicker on TCNet. So, oh, pshaw. So yeah, I see that it's opened actually up here on the other ones. So yes, it is a kicker signal. All right. Oh, I do that, C. Garza, just to make sure somebody laughs at my jokes, even if it's just me. And Devin, nothing here yet. It is at the bottom of the trend channel, but it's a long hoe to row, long row to hoe. How's that? Just to bounce back up to the T line, and your stochastics aren't telling you it's time to buy just yet. And Vive has to open positive, otherwise it's coming back down to test the T line. I think we did Micron. Has to open positive. Okay, so tomorrow, this market definitely needs to see some strength on the open. If they close the Dow below the T line, that means all the indexes are now below the T line. Get ready for some more profit taking. Okay, one more. Noodles. Another one we can just stay long as it stays above the T line. Well, AVNR backed off today, but closed back up near the top end of the trading range, which means they were selling when the knee-jerk selling of the market was there, then somebody was buying, so you stay long as it stays above the T line. All right. Let's call it a night. We'll see. Comment on Fibonacci numbers. Fibonacci numbers are just if you see a strong uptrend, the Fibonacci numbers are something that you could put on to show you where the likely natural retracement numbers are. And they're usually 31%, 50%, or 62%. I forget which ones were up strong that were coming back. No, I can't remember there. Usually after a strong uptrend, if you start seeing a pullback, then you can put the Fibonacci number at the bottom of the trend and the top of the trend to see whether it's going to pull back to one of those. Oh, BABA? Okay. Yeah, so if and there's a lot of them are automatic on your chart systems. You click on the Fibonacci's, you put one point at the very bottom of the trend, another point up here at the top of the trend, and then it either pulls back to this retracement, which is 31.82 or something, or the 50%, or the 61.2%. Now, these are natural numbers in nature, and a lot of things have those those natural numbers built into it. I think if you look at a leaf, a lot of the leaves have a 38% or 31% something between the little veins of a leaf. And I think Fibonacci numbers, aren't they, they're numbers that, what is it, one, they're numbers that can't be divided by any number other than themselves. Seashells, okay. So, all right, with that, and that's why I kind of put the T-line into the same category as a Fibonacci number, with the simple concept that everybody knows the 50, the 200, and the 20. And they'll watch to see whether prices move back there because they all have those on their charts. Nobody, or very, very, very few people have the T-line on their chart, yet it acts like a natural support and resistance number, somewhat along the same natural numbers as a Fibonacci number. Okay, everybody, we'll call it a night. We'll see everybody bright and early in the chat rooms tomorrow. We'll see you then.